where are you going to actually invest your money? And the first thing I would say is invest in one asset class first and learn to dominate that first. When it comes to my portfolio design, I invest my money in 5 places in this order. My number 1 largest investment is my own business. That's Briefs Media. Number 2, the second largest investment is into physical real estate. Again, why physical real estate? Because the real estate gives me the active ability to generate the cash flow. Number 3, the third largest place where I invest my money is into stocks. Again, why stocks? Well, because stocks give me the ability to invest actively and invest passively, primarily for cash flow, but I also have some growth investments there as well. Investment number 4 that I have is in speculative investments. This is more now on the growth side. Again, it's more active for me, but this is a smaller piece of my portfolio. These speculative investments for me are number 1, the startups that I invest in, and number 2, the cryptocurrency that I invest in. But this is a small piece of my portfolio because I understand that, well, all of this could fail. I've invested in multiple startups that have gone to complete zero, bankrupt, and no longer exist. All that money has disappeared. Cryptocurrencies, I understand, can go down to zero, and it's not going to affect me. So I treat these speculative investments like speculative in my portfolio, because if the speculative part of my portfolio goes down to zero, I will be okay. The bulk of my portfolio is cash flow generating because that's what I like, and I also have a little bit of growth here as well, but I know that I prefer cash flow. And then number 5 is physical gold. This is about 2% of my portfolio. This is the smallest piece here. I don't like to think of gold like an investment because it's not actually working to produce any value. I look at that gold as a way to save hard money because it's a physical representation of money. I mean, it's a representation of that effort and labor and time to mine and produce that physical gold. But for me, it's that doomsday protection, that insurance against a downturn, against inflation, against a depression. That's why that physical gold is there. Now, I don't want you to copy my investing strategy. I want you to understand my thinking process because my goal was to start with one thing first. And so I was making money from my business, and then I started investing in real estate. Once I started to get good at that, that's when I started diversifying and I started putting money here. Then I started putting money here and putting money here. So you can't go out and start doing everything. Start with one, get good at that, and then you can start to diversify into a different asset class after that, and you can build your portfolio the way that best fits your needs based off of everything we talked about here. And this brings me to number 5, which is your selling strategy as an investor. Your selling strategy is going to depend on what your goal is. Because my goal is primarily cash flow, I don't like selling. At least I don't like selling the assets that are paying me with cash flow. I don't personally mind selling some of my growth investments, especially if they're more speculative, if it can produce even more cash flow, because I can live off of the cash flow and it gives me money in my pocket today, and that's what fits my investing portfolio. You gotta do what's right for you. And this is where, for me, I'm not a huge fan of selling. Unless it is more growth or more speculative after seeing a big gain. That way I can get more of this because that's what my investing strategy is. So you got to find what's right for you. And I just want you to think about taxes when it comes time for you to sell as well, because when you sell an investment, you have to pay taxes on that. Now, those taxes can vary depending on where and how you're investing your money. Like if I invested $100 into the stock market today, and then 5 years later, that $100 grew to $500, that $400 of profit is taxable that I have to pay taxes on. Now, yes, your investment income has lower taxes than if I made that money from my job, but there are certain tax breaks that you also get when you invest your money into something like real estate. Because if I invest my money into real estate and I'm getting that cash flow year after year after year, I told you a little bit earlier, the real estate allows you to make money from your rental income and then file tax breaks on that income so you qualify for lower taxes. But the other thing that you get is, let's say I bought a property for $100,000 today, 5 years later I sell it for $500,000. I can sell that property, make that $400,000 of profit, and dump all $500,000 into a bigger property, paying with more cash flow, and pay $0 in taxes today thanks to a tax break in the IRS tax code called the 1031 exchange, which says real estate investors can own a property for longer than a year, sell it for a big profit, and not pay any taxes, assuming that they go out and buy another piece of property. But you have to make sure you work with a professional when you do that, because there's a lot of nuances. However, the reason why I'm telling you this is you got to understand your goals and you have to understand how taxes work. So as you start to grow your wealth, get yourself a good advisor to help you with the process. That way you can invest your money and keep most of the gains for yourself instead of just giving it to the government in the form of taxes. That's where your tax strategy comes into play, and when you understand that, it can help you compound your wealth even further. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you gotta do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.